There's a famous quote that I just brought up here as you're saying this, which is, again, a Warren Buffett quote, but he says, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. And I think that in the short run, price is a reflection of people's fear, people panicking, a lot of FOMO. Basically, it's just psychology driving the market. In the long term, it's a weighing machine. Like, what value does Bitcoin actually bring to the market? And I think this is really important to kind of share this, because I think in my mind, Bitcoin's volatility, people tend to think, oh, Bitcoin's price is fluctuating. This is a symptom of Bitcoin. In reality, what it's actually highlighting is it's a symptom of the denominator, which Bitcoin, the denominator is the dollar. Bitcoin is priced in the dollar. The reason why Bitcoin is fluctuating is because we have a central bank, we have a handful of individuals. Ultimately, we have one individual, Jay Powell, standing at the top and saying, hey, we're going to cut interest rates. Oh my God, capital is easing, money floods into Bitcoin. Hey, we're going to raise interest rates. Oh my God, capital is tightening. Oh, money floods back out of Bitcoin. And so this Bitcoin's volatility in many ways, when you step back, is a product of the underlying denominator. And so some people struggle to grok that. And there was this book that I read a little while back. It talks about how gold, before, when the currency was pegged to gold, gold was far more stable. Since the currency left the gold standard, gold has been far more volatile. Again, that's not highlighting that gold is a volatile asset. What it's highlighting is that the underlying currency is far more volatile. And so I think that's where some people just need to like reframe how they think about this price action and just continue to ask the question, like, has Bitcoin like fundamentally changed in its functionality? Has the narrative of the story changed in Bitcoin? And I would argue, no, it hasn't. Like this year, nothing has changed. If anything, I'd be even more bullish just because Bitcoin, we are seeing greater adoption, and we're seeing some incredible individuals talking about Bitcoin. And I think we're seeing amazing development on Bitcoin. And so from that respect, I think Bitcoin is continuing to do what it is doing.
What are your thoughts on the 4-year cycle? And that's where there's a ton, obviously, of back and forth right now with the 4-year cycle is dead. No, it's here, going back and forth. So what are your thoughts on the 3 green candles, 1 red, or is it 2 green, 1 red? What do you see when you look across the horizon here?
I would say that people from a psychological lens like to paint the world as black and white. They love to be able to say this is moving because of this. And I think the world is a lot more complex than that. And so I would like to say, yeah, we've been having 4-year cycles because of the halving cycle and because of just the way Bitcoin has kind of, the code is written in Bitcoin. However, when you actually just step back, you could also argue that the reason why we've had the 4-year price movement is because of it's aligned with the political system. And you've got a 4-year electoral system where you've got the president voted in, you've got the midterms, you've got capital flowing. And so you could also argue, well, maybe it wasn't moving because of the halving cycle, it was moving because of something else. And so ultimately, what I would say is that there's multiple factors. The supply, the actual physical act of the halving, cutting the amount of supply while demand stays constant or even increasing is always going to increase price. However, you've also got easing and tightening liquidity positions and such. And so I would say that what happens moving forward, I lean towards saying that I think that we're going to move away from this 4-year cycle that we have been kind of seeing or being able to somewhat track. Each 4 years, it has been lengthening somewhat, but I think that's also been a function of the liquidity positions. And I feel like given that we're going into US midterms, you tend to get easing into midterms. And given the position in the market right now where we're seeing gold rip, I think people are starting to increasingly feel unsteady about the stability of the economy. I tend to feel like it wouldn't surprise me if this 4-year cycle model kind of completely breaks and we start to move on up again. And I would also argue that, like, in the financial market, you've got something called like Max Pain. Some people listening to this probably know about Max Pain, but it tends to be that if the majority of market align in one direction, well, Max Pain is probably going to pay out whereby price moves in the direction which is going to cause the most amount of pain to the participants. And so if people think that we've got this 4-year cycle and they think the price is going to go down, well, what do? We start to get people taking short positions to try and capitalize on that down movement. Well, if you have a whole bunch of people taking short positions and then Bitcoin's price starts to move back on up, what ends up happening? All of those people that have taken short positions now have to start covering their position. And by covering their position, they're going to start buying back into the market, which then further amplifies, it creates a kind of self-fulfilling prophecy, and Max Pain plays out. Everyone kind of struggles because everyone's kind of predominantly lined short. And so it wouldn't surprise me at all if we were to kind of break this 4-year cycle. But in the end, it's probabilities. It could do, it may not.
Yeah, it's fascinating. I mean, obviously, JP Morgan is such a central node in the legacy fiat debt-based system, and they're making waves. And it's Jamie Dimon for 10 years, telling everyone fighting Bitcoin, and then obviously in behind the scenes, they're constantly doing the opposite of that. And then here we are again. What are the incentives of some of these entities like a JP Morgan, one of the biggest nodes in that legacy system?
Oh man, I wholeheartedly agree. Right now, there's a scene in The Big Short that I feel like is playing out. And that scene is when Michael Burry has taken out all of these credit default swaps. And he's bought all these credit default swaps through these varying banks, one of them being Goldman Sachs. And at the time, the housing market in a kind of, I think it's third quarter 2007, first quarter 2008, starts to collapse. Well, he's got these credit default swaps. Basically, for people that aren't familiar with a credit default swap, he's basically got an insurance policy on the collapse of the housing market. So the housing market starts to collapse. And instead of those credit default swaps starting to capitalize, all of a sudden they start going down or staying stationary. So he calls up Goldman Sachs and he's just like, I'm not following. Why aren't these things being priced according to what's happening in the market? They're like, I'm not really sure. We'll have a look into that and we'll get back to you. And of course, they give it a little while, a month or so, and then they give them a call back and they're like, looks like there was just a little bit of a repricing. We've now adjusted them accordingly. And he says, no, essentially what you've done is you've now sold off all your positions, which you were seeing negative or like losses on, and now you've realigned your positions so you're positive so that you're going to benefit from this collapse. So you have now managed to offload basically the selling of these credit default swaps, and you're now on the buy side. And I think that the way I see this is that they don't benefit from a housing market collapse unless they're aligned to that position. And I think that a lot of these banks don't benefit from Bitcoin, but if they're aligned to that position, I think they take both sides. They're trying to essentially push Bitcoin's price down because they don't want it to succeed. But at the same time, they recognize, well, if it does succeed, while the price is down, we might as well take out insurance and hedge our bets and build a position. And so they benefit both ways. They try and suppress the price, and it wouldn't surprise me if they've been buying this whole time.
Yeah, and just for the average person, just so it made sense coming from myself, I think you said it beautifully. And JP Morgan's fear and greed, not the average person. So you answered that beautifully, because it's JP Morgan, their own fear and greed, and they're playing both sides of the spectrum. I would love your thoughts on just like the Bitcoin, the bonds that JP Morgan has, or whether it's Saylor and what Saylor is doing, the lending from Strike, with Tether, what's going on. It seems like some of this is, again, going to how can we centralize things? How can we separate people and create paper claims and separate people from their Bitcoin? Like when you look out across the horizon with like all of it and what's happening, where do you kind of see things shaking out? Does it feel like that to you? I don't know if you've seen this in the Simon Dixon stuff, but I would love your thoughts on some of this.
I saw Simon Dixon call out Jack Mallers. That's one thing that I saw. And I think that we see how the existing system functions. And through lobbying, I think a lot of these big institutions, they want to push regulation that's in their favor that creates a bit of like a walled garden, so that it's much harder to compete with these institutions. We've seen this time and time and time again. We saw it with, 2 years ago when Silvergate and Silicon Valley Bank kind of went down. What we ended up seeing is a lot of legislation go through where they basically say, look, the government through the FDIC, from my understanding, previously it was up until $250,000 US, your cash balances in your account were covered. Well, anything above that was not covered. So what did they end up doing? They ended up saying to the big banks, JP Morgan, Goldman Sachs, Bank of America, they said, hey, we're going to lift that limit so that it's unlimited above $250,000. But all of the smaller credit unions, you guys are still capped at $250,000. So what does that do to all of the wealthy individuals that have more than $250,000 in their small little credit union? Well, it's now got an incentive for them to move to the big banks. And so all of a sudden, we saw a massive wash through in these smaller little credit unions, and they're struggling. And so a lot of regulation is put in place to create consolidation and monopolies. And I think the same thing is true even in the Bitcoin space. And I think that what Simon Dixon was calling out Jack Mallers on was the fact that a lot of these startups in the Bitcoin space, they want to get funded. But then you've got to question, well, where's this capital coming from? And many times the capital is coming from these individuals that are heavily integrated into the traditional financial system that has a disincentive to push Bitcoin. So you've got to wonder, like, why are they funding their opposition? Is it because they're trying to, they're trying to take it down from the inside out? Is it because they're trying to hedge? We're never necessarily going to know that answer. But I would say that I think that it's scary sometimes because the traditional financial system is so interwoven and complex. And if people want to silence one another, if they want to kind of change the course or the trajectory of a company, if you are heavily indebted to someone, you're going to be under pressure from them. We see that in the pharmaceutical industry. Like 70% of media is funded by the pharmaceutical industry.
Yeah.
So the moment you come out, if you're a TV show host or whatever, and you try and voice any form of dissent against big pharma, well, you just get fired and you lose your job, because ultimately media is compromised because the majority of their balance sheet comes from big pharma. And so I think what I hope is that the Bitcoin space, I hope that we have enough developers and enough forward momentum without the need for excessive external input from the traditional financial system, so that we can hopefully minimize the chance of people being compromised and pushing things in certain directions.
If you like that clip, then you definitely got to check out this next spicy clip. I think you're really going to like it. Come on, check it out. But if you want the full version, the full interview, then check that out over here. Come on, do it. See you in there.